you higher than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin getting that rejection off the local point of control, as we also see on this mean reversion path to the upside. This is the equilibrium point of this pitch fan to the upside. We've been having price trapped in since January, so it's getting off that equilibrium zone and possibly coming down into a bullish order block before reaching the 382 region. This bullish order block could also be a previous point of control of the 60 plus days of consolidation here, and this would leave you at the 28k region. Also, the golden pocket 618 plus 0.6566 region coinciding alongside that on the Coinbase chart. Previous rejection off the point of control here at 30,270. Where are we going from here? Let's find out by stepping into the high block capital liquidity map. What is the liquidity map? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters get burnt or lie in wait. So let's do that now in the 1 minute time frame. So as the 1 minute time frame adjusts itself, let's take a look. Let's make sure the candle is lined up properly. There we go. All right, so as we dropped down beneath 29k and took out this little pool of 28.8 region, 28.8 region of 50x and 100x from back here, we pinged in some 100x shorts rather, to the tune of $182 million pool, and the 100 extras got sold into, they laddered their orders into the support structure and got triggered and immediately came back to gobble them up.
Fatality.
As it likes to do. And are we going to go higher into the 50x pools up above here at 29,382 now, having pinged in $182 million in that drop there, while knocking out some of the longs, including all the 100 extras that we were talking about last time on the stream. So let's take a look up here in the tune of what's going on up above. You do have an imbalance on the 1 minute time frame, suggesting that you can come back into these 100 extras. We are on the weekend. Low liquidity weekend is Saturday morning my time in Asia, so we do have this 36 million up above and 100 extras alongside their partner in crime at 50x at 182 million at 29,382, and the entire region still at play over here, this $247 million pool at 29,548. We're expecting this to get hit before the downside play. Did not have muster the strength to do so. Currently on the 1 minute time frame, you're imbalanced only by a measly $1.3 billion, which seems like a lot, but not that much by comparison as we expand our vision to the higher time frame. Shout out to everyone here. Okay, so higher time frame, 7 day. 7 day does have more percolating up above at 30,250 by a lot. It is only about 10 billion in up to the 30,350 region, from 30,200 to 30,350. You do have 6 billion down at the 28,700 on the 7 day time frame. We did previously come down into that, only taking out 3 billion before shifting out after pinging in that 184 million on the shorts. Are we percolating for a stab to the downside? Let's go ahead and expand our vision to the monthly. All right, and on the monthly time frame, pretty even Steven. Previously, we did have an imbalance to the downside, which we did call for coming down to reconcile at 28.7. We stabbed that and came back up into the shorts. And now where do we want to go from here? Let's zoom in. So 14 billion at 28.2, 12 billion at 28.1, 10 billion 28.3, and 8 billion 28.4. So you have nearly $40 billion down into the 28.1 region. And just above you have only single digits, as it has been previously hit. So you would need to come up to the 30,200 region, which would be an entire $1,000 increase in price to come get this amount. Up to 30,005, you have 13 billion, 30,002, 10 billion, 11 billion, 30,003, 7 billion, 30,004, 12 billion, 30,005. So to see that comparative amount of 40 plus billion, you would need to go up $1,500, as opposed to drop from 29 down to 28. That would also be the $1,000. So a $1,000 drop gets you $40 billion. A $1,500 rise gives you the same. Granted, you have this amount in between, but it is only 3 billion pools. So if you just zone everything out and look at the monthly time frame, it does look like we could stab down to that 28.1 region, coinciding nicely with our levels here on the golden pocket. Point of control rejection locally twice, and coming to the support structure here. Makes sense to me in terms of a narrative framework on the monthly time frame that could be occurring. Let's go to the 3 month to expand our vision further. Also, that imbalance to the downside at sub 25k at 24.6 and below. You have that yellow hot region down below, and the entire insinuating path that leads the liquidity to that region as a potential Bart Simpson play, which is not really a Bart Simpson if it's taking weeks and weeks to play out. So this falling wedge pattern, basically. On the 6-month time frame, this gets higher fidelity in the image that it shows us. We have 24.6, 142 billion down at 24.6, 180 billion, 24.3 at 24.3, and 100 billion, 24 even. So you got 300 billion down there, and the entire path also caked up in liquidity down below. Not to discount what's above us, we do have 137 at 32.1, 77, 32.4, 112, 32.7, 100 billion, 33 even, and 122 at 33.3, and nearing 100 at 33.6. So you do have a large amount percolating up above that could start to meander price up there if we spawn enough divergence and stop enough people out in profit. But as it stands, just looking at the bands of liquidity alone, there is more weight to the downside than to the upside. Let's go ahead and expand our vision to the last time frame of the 2-year and see what is there. So you do have that $241 billion down at 24.4, 123 billion, 24 even, 179 billion, 23.6. Are these protected positions? Is this a BlackRock ETF approval surge to take out the shorts up here idea, or it's just retail and it's coming down to grab this liquidity? You do see this $181 billion at 32.4, 181, 32.8, 197, 33.2. So you're getting $600 billion up to the 33.3 region that at some point we could stab up to before making the deep retrace down into the sub 24K region before the halving of Bitcoin. So this is a 2-year time frame, so this is a narrative structure that we could look at this as a single top, and then we could have a double top extended M pattern before making the deep retrace into these regions for a possible reaccumulation idea on the daily/weekly time frames. Let's go ahead and throw on the monthly time frame to keep these pools lit up down below at the 28.2 and 28.1 region, and also have our 1 minute open as we go into the Binance chart. All right, so where we stopped yesterday. So yesterday we were talking about a potential stab up to that pool of 200 million. We were saying it's possible that Asia could pump it and fade it into London. Immediately thereafter, they did fade it. They pumped it and faded it into London, which rose it up and went sideways, consolidation mode. New York pumped it and faded it off the 786 of the bearish trend-based fib level and took it down into the 1 region of the take profit zone. Let's reset this, but we'll leave the pool there because it has yet to be hit, and at the 29.546 region. So they will come back to that at some point in time, if not over the weekend. So as we start to shift this up here, what are these levels? What are these fib levels? Well, this impulse to the downside and the retrace here considered inside the math that it wanted to come down into these regions, and sure enough, the 236 entry model did have you come down to the 1 and meander around in the 0.65 and the 786 region, and eventually come down further inside that take profit region here. And we have yet to hit down below into the 1382 if that's where we'll go at all. We attempted to come back up above to test the support structure of the daily support lines here on my chart at 30,021. We got a rejection off that daily support zone, basically a stop loss hunt, and we came back down into these regions, and we have been consolidating on the 1 level, considering whether we will go lower to the Hail Mary at the 1618 perhaps. Also a support structure here. We could be coming into those regions. We did outline that for you on the Coinbase chart just a moment ago. So let's turn on our oscillator, see what's going on, and on this low liquidity weekend, and see what we can in the charts. Link in the description for more, momentummaster.info. You can toggle everything you want to see. You can see each component in its prominence as we go over it, like the trend cloud. And let's go over each thing we see in the charts as we see it. So previously FOMC meeting, we did see these 5s. with the diamond and the X. These are the higher time frames. Exhaustion, we did see the baseline scooping up the price. We considered going long and got shaken out into the Wednesday meeting, but we did see that surge up for 2% had we held into the meeting, which is not my type of play, but could have seen the math didn't care about the meeting, and we did see that 2% play upwards. As of late, we did see this drop down, talking about the rejection off the 706. We talked about 3 hits to this region, 1, 2, and 3, and that took you to the downside. We had that outlined for you as well. We did not catch this upside path, but if you looked at the oscillators, they had you at hello as well, just a recalling of the week of consolidation for the last 2 weeks. If you go to the 1 hour time frame, you can see the baseline crossing up here. What is the baseline? Your first sign of reversal. So the baseline is one of the few leading moving average formulas on the market, seeing this swing failure pivot, the SFP, the chickens drinking water. There's a lot of YouTubers with different terminology, but it's basically failing the swing to the downside, and this holding of the baselines was your clue to the upside here, and you could have taken that. I was at work at the time, so I did miss that. Or actually, no, this was midnight, so I was asleep after scalping the NASDAQ. And oops, we got to throw on the regular. If we look at what was being shown in the charts for the B oscillator, we did have bullish divergence off of the RSI and the stochastic, or not the money flow. So we had the money flow and the RSI divergence here off that swing failure pattern. You could have taken that up for some smooth plays. As it stands right now, you do see slight money flow divergence on the money flow here, and RSI has yet to see that divergence. So are we going to see a play off that on the hourly time frame? Let's go ahead and start to make our descent down in through the time frames. So previously got this 1 candle rise to the upside to nearly 30K, and basically a sharp bearish engulfing thereafter. We started to see this baseline cross up potential on the daily time frame. However, the trend cloud on the daily time frame is bearish ultimately, and the thinning of this cloud expressing this downside momentum. You had this previous cross down event from July 1st that's just been seeing steady downside suppression of that upwards momentum. If we look at the 5-day time frame, the 5-day time frame also closing in 3 days time. We had a previous indecision doji of that up down path. You're starting to see this cross stochastic data being reset on the 5-day. 3-day time frame cross down event was back on July 24th. We let you know about that, potentially suppressing the daily from taking off as we potentially make our way down to the 3-day cloud, which also coincides with our levels. So coming down to kiss the cloud, as you do, fractal in nature, you come down, you pierce, you come down, you pierce the cloud, you come back, you kiss it, you get that continuation. You come back, you kiss it, you get that continuation. You come back and kiss it, you make that continuation. It's still holding. The angle in which the cloud has shifted is not in the upwards momentum path, it's flat. So there is more downside weight to the cloud, if you will. The thickness is still there. It has not thinned so much, but it has thinned by comparison from the 60 days of downside on the 3-day time frame. And these type of shifts of the cloud give you the insinuation of support and resistance when you see this rejecting off of it. Okay, so if we look at the 3-day time frame, we already see that this could potentially be suppressed by the Williams. The angle in which these momentum waves are opening could come up for that double top and see this come up, since the money flow is beneath the RSI and the stochastic is reset on the 3-day. So you could be seeing a potential attempt at a surge up. at some point, but the cross down of the baselines is intact until it is not, and we did not see that flip for 60 days the last time it crossed down over here. So going to the daily time frame, this is why we could be seeing a suppression of the daily stochastic takeoff here. We had a vector candle with a followed by a red vector which engulfed it slightly on the candle body, not including the wick, and you're seeing this rejection pre-50 level, and the money flow is coming above the RSI on the daily time frame, suggesting a fatigue as you come lower and trap some bulls. You do have this daily stochastic, the Williams lines are quite low here on the daily time frame. You could come a little bit lower. You're not at the exact bottom, but it's been a while since we've come beneath the -70, -80 line, so coming beneath that with a fury would be beautiful to see for a potential long play. You're starting to create money flow divergence here. This is preemptive, so check this out. You have the money flowing back in, and yet now you're making kind of a lower low on the money flow here. This is discounting the RSI here, so the money flow potentially starting to try to sniff out a bottom here on the daily time frame. Let's go ahead and shift to the 22 hour had that hidden bearish divergence on both the RSI and the money flow, which got that rejection off the super trend and came back down. Dynamic support and resistance lines of the super trend are something useful for traders to use for stop loss / entry levels. It does the math for you, so you don't have to, using average true range ATR. You can look at that here if you want to look at the super trend back-tested true range zone, which also displays a percentile needed to reverse the current trend. This will likely be a reversion point to test as support or resistance. And so that does that for you, which in this case is 3.5% on the 12-hour time frame. It adjusts, and you see how strong the bearish trend is, and since when? July 24th. And so this 12-hour time frame also failing takeoff here, resistance on the cloud. The baseline cross up has given you some percentile from that baseline holding, but overall is starting to insinuate the rejection of the thin boy baseline and coming lower. The money flow is beneath the RSI here, so there could be a push up at some stage on the 12-hour time frame. If you look at the 12-hour weighted moving average, it's attempting to hold that. Next step is the adaptive down here at 28,329 on the 12-hour time frame. You could come back to test that for support. This would just be your continuation wave to the downside. If we go to the 6-hour coming down here after previously being overbought, starting to hard reset off the 50 would be the idea to come lower. The ambiguousness of the Williams has not given us a good setup in quite some time. We've been seeing this consolidation range, and the oscillators have been quite ugly for some time now. I'd like to see a smooth double bottom event similar to what we've seen in the past for these nice entries for longs. Similar to here, like where you get down into that sweet spot, double bottom, fertile crescent, whatever you want to call it, and you get the rising sun out on the 6-hour time frame with these baselines holding the price like this. This is the type of clean play I want to see, which was similar to Sunday, April 23rd. Something like this, where you come down and you spawn some bullish divergence. You get that double bottom, it's nicely oversold on all these oscillators. You've cleared out a range. You know, that's the type of play I'm waiting for personally. So this sideways action, not my cup of tea. I don't like to be one of the speculative bunch that end up getting stopped out on both sides like this. So we will patiently be waiting for some volatility to enter and then take the potential reversal. All right, so the 6-hour time frame wants to reset here. The money flow flowing up above the RSI, suggesting a fatigue as you go lower. Money flow going up above that as you go lower, suggesting a fatigue of longs and potentially coming hard rejection to the downside. The Williams could come lower here, not in an oversold status, not at a level we like on the 4-hour time frame. 4-hour is at a stochastic region, which could be considered getting to that oversold region, although the last legs of that reset could be furious to the downside, so watch out for that. On the hourly time frame, you are getting what we were talking about earlier with that bullish divergence on the money flow, but you're not getting it on the RSI. So the money flow coming back to the RSI for the true strength. And if you're looking at the hourly time frame, you previously hit that region at 28,809 and then spawned in that liquidity. And this is where we start getting into the nitty-gritty. So the liquidity getting pinged in at that 29K region and above, with the 50Xers at 29,382. So are they going to, is there enough to justify coming down to here, or do they have to induce more? Over the weekend, when they induce traders, there's very few that enter the charts. They have to do a furious move to both sides to start to ping the liquidity, as I call it. By pinging the liquidity, you do stuff like this where they go up and down, and then they get to assess, okay, there's 136 million in longs as opposed to 264 million in shorts. Let's go up, and they go boop, and then they go grab them because they stacked some more over here with the 296 million in shorts. So you're waiting to see. As of this moment, there's a significant amount more in shorts. So if they go down a second time and then start to ping in another pool similar to what they did back here, then you could be getting that W formation out in similar fashion to what we saw on August 1st. So you already have $182 million trapped in the region of this 28.95 when they entered. So they're at a drawdown as of this moment, and if they leave those guys trapped in this zone and come down a little bit further and ping in some more shorts, they could come up into those regions and beyond, as they have previously have these traders in the trade still, most likely at 29.548, that 247 million pool. But if you look at this is where internal versus external liquidity comes into play, because if the internal liquidity does not justify enough to go up to these regions on the external liquidity time frame, then they just crap out and go down further. So on looking at the external liquidity range of that 40 billion down here at 28.1, it only requires them to go down $1,000 to grab that. Would that be something that the market makers are interested in doing? So if we look at the hourly time frame, we're just doing some meandering around here. We have the potential of a baseline cross-up event about to occur. If you just zone out everything else and you just look at what's going on here, you have 4 time frames oversold with the diamond and X. This is on your stochastic array, and a monitor that monitors over 7 different time frames. When you start to get those higher time frames oversold, you start to see this potential of a bounce to the upside, and conversely, if you start to see that on the other side of the trade, you see that to the downside. So we had 5 time frames overbought, and we started to see this retracement. So we're starting to see this potential of the baselines crossing up here. If this locks in, you could see a little bit of a 𝗥𝗲𝗄𝗃 on the hourly time frame. The money flow divergence spawned off of this buyback here, and these 100x shorts and 50x shorts that entered in conjunction with them could see a play to that region of the pool outlined before. Looking at the 15-minute, the Asian range now resetting, starting to reset. The Williams is overbought here, starting to get that potential cross down, trying to maintain the cloud, which is mighty thick after that drop here. you've got that baseline cross up event, and just taking that at face value with that would have given you 0.5%. Are you starting to see the Asian range? We're just basically holding this bearish trend-based fib line at the 1 level. Just a reminder, let's go back to the 6 hour and show you where that is at 29.09. So this is something we bounced off of multiple times, broke down below, came back above, and now we are wicking beneath this region. Do we come into the 1382 or not is the question. 6 hour cloud is flat here. This is insinuating that it could do one of those fakeroos where it shifts up and then shifts back down again. It's been doing a lot of that recently. One place to see that is on the 4 hour cloud. We had this shift up and shift down and shift up, and it's going sideways on the cloud here. You're getting a rejection off of the 4 hour adaptive moving average, which also happens to be that local point of control. How do you get local point of control? Well, you can go into your projection tools, go to volume based, go to fixed range volume profile. I like the fixed range ones because you can see certain ranges within a consolidation, and where are those point of controls within that. So that also coincides with the adaptive moving average. This is a trend adaptive, back tested to nice levels here, the adaptive moving average. So if we get rejected off this adaptive, then we are coming down into these regions. This is what we're here to see. We're waiting for that lower level. I'm not interested in scalping longs here. They could even just come up, take out some of the liquidity, get that trapdoor confirmation, and just come lower again. So if you do get that hourly play, where is that hourly play going to take you is the question. So you're reclaiming the 50 level of the stochastic RSI on the hourly, ambiguous at best. So basically, since Wednesday, Thursday, Friday, all the days seem to blend together when it's consolidating. There's no real memorable thing that happened in the week. We had basically Monday dropped us to the downside, Tuesday brought us up and took us back down on Wednesday, Thursday kind of went sideways, and Friday took us sideways and then eventually down. So there's not really a narrative structure building, you're just sideways range trading at this point. So coming back lower, breaking that level on the hourly cloud here. The hourly cloud is also shifting to the downside here, so getting this rejection off of the weighted moving average and the cloud, suggesting that you could be seeing your way down, A, B, C, your way later. These kind of lightning bolt plays where they trap some liquidity in, and then this B wave is just to take out some of these 100xers. As it stands right now on the weekend, there's not really much pinged in, so even the rises and the falls, the main pools you're seeing are 23 to the tune of 23 million, 20 million, 24 million, 36, 36, 35, 16. So there's not really much to grab, so they go and grab both sides, taking the 21, the low-hanging fruit, the 48, the 30 million, the 32 million, they just come and take both of these because there's nothing else being induced at the time. When these juicy characters at 182 million enter, they don't hesitate to come grab them immediately. And so if you see a drop and these start to ping in on those time frames on the 1 minute, $29.85. So we went and reclaimed down to this region. we basically came down into this region. Let's go into the 2 minute. Actually 5. I'm going to turn this off really quick. So we basically went back into this candle. This was a level here. So we went into this wick just before we shifted out. This is a BPR, a balanced price range fair value gap on the 5 minute that we have yet to reclaim. We came down to the wick region at 28,780, would reclaim this 5 minute candle here on a fair value gap. If you don't know what fair value gaps are, there is a free indicator to help you with that called fractal break imbalance fair value gap liquidity void. You could turn that on and it will draw those for you. I don't think it measures the BPR ones though, so let me go back and replay this really quick, and then we're going to switch the time frame. And so on the 2 minute time frame, yeah, it takes you all the way to that top of that BPR. On the 5 minute, the balanced price range one would put you from that level at 805 down into this 780 region. We have yet to reclaim this gap here on the 2 minute time frame, and that is what happens. They just go back and reclaim these voids. And they didn't reclaim it just yet. Let's go ahead and go back to regular price action. Throw this back on. So as of this moment in time, you're holding the baselines, and the 15 minute with the hourly wants to play out here. So how high does it go? Do you start to come back into the region here and take out some of the liquidity and go higher? The highest region on the 1 minute does suggest that you come up into these regions to get the 32 million up here, or the 36 million plus at 29,196. I don't range trade the weekends, just putting out the ideas for you to see what's going on. Hourly time frames in terms of a scalping mechanism are strong, but with confluence here. When you have this rising sun with the baseline cross up, that's when you see some fervor of at least 1% or so. So where we're at right now in the middle level, it's ambiguous, so not my cup of tea. What I'd like to see is a rejection, and hard rejection, and just coming down into these regions, waiting to see that liquidity grab further to the downside as they trap more longs. $12-hour time frame closes in 9 hours. 6-hour time frame closes in 3 hours. You have the cross down event on the 6 hours, so this is something to take note of. When you have the cross down events on these higher time frames, they suppress the lower time frames, and this is why seeing these cross down events starts to bring with it some fury potential. So this rejection of the baselines on the 6-hour time frame is something that could suppress those lower time frames from taking off. So seeing this cross down event is something where it brings me this insinuation of downside based on past backtesting experience. So we told that too back here when the money flow was coming up above the RSI here. We said watch out for this bearish divergence, and then sure enough it got rejected off the cloud and came down here, and the money flow started to come back, or rather the RSI came back to that in that case, and now you're starting to see the money flow out away from the RSI again. So it's starting to set up for a play, a reversal play to the upside at some point on the 6-hour time frame. Sideways range trading. how long has this been? It's been 2 weeks now? Almost, nearly. We're approaching 2 weeks of being in this region at 29K. They're trying to bore traders to death. That's the new thing. Let's see what you guys have to say. Shout out to everyone here. Let's go ahead and take a look at total. Total also still not reclaiming the zones. It's on a projected path to this region at 1.104 trillion, rejecting off the 786, coming down to the wick here. Same thing's been occurring with the altcoin, slow bleed out into the pocket that we had projected out for you as you reject the 236. Boom, 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 falling back down. Starting to get some rocket ships of oversold potential on the altcoins. Total 3 is all the alts. Alts not seeing as much interest as they have in the past. People getting disinterested. A lot of FUD out there with Binance and all this other stuff going on. Bitcoin dominance starting to rise, getting to a nuke level of interest, coming back to that 50% of the vector recovery zone of this Bitcoin dominance rise. The USDT dominance also rising, insinuating that people getting knocked out of their Bitcoin trades into USDT or selling off into USDT if they both rise at the same time. That's what it insinuates. Getting a previous 0.5 bullish bounce off of that displacement as people enter back into USDT. Also golden pocket bounce out of there too. Coming back into that 50%. There's a vector recovery over here and over here. The traditional TA does play out for dominance as well, ironically enough. And then you had this rocket ship triggered by a stop loss hunt out potential. If we go to the dollar went up into our region and started to drop. We did talk about that retrace back into these regions, which it did. And we're also seeing the NASDAQ take a tumble. Had a previous stop loss hunt and drop to the downside. We were putting out some nice ideas to the Discord here. Where was that? We had that top idea with the bearish divergence on the 1 minute at the very top at 605, and that would have had you at a nice region here, 605, and boom, take you to the downside here on NASDAQ. All right, so we're gonna just keep it short and sweet tonight, and I've got to go to a nice fireworks festival with the fam, so we're going to see some nice fireworks in town. So this was the rise, stop hunt rise, drop to the downside, people taking profits off of their longs as potential red day for the end of the week. Run for profit Friday has been. And looking at the weekend, so Bitcoin coming lower is what we want to see over the weekend, coming down into this region, bleeding out. Would be nice to see lower discounted prices as people lose interest and leave the altcoins. The Bitcoin dominance rises, the USDT dominance rises, and things bleed out into Fibonacci levels below. That's where my story is, and I'm sticking to it. Seeing that cloud rejection, that cloud shift on the hourly, just not bringing the flame over the weekend. Could be seeing this bleed out to the downside. That 6-hour arrow that I have here is what is insinuating this, with the cross down event and rejection of the price on the 6-hour time frame. I am noticing though, be wary, the pools of shorts are building to the upside. The imbalance is only to a measly $1 billion, so it's not so interesting to me just yet. But when you start to see this $296 million plus $264 million, that's when it becomes irresistible to the market makers to just go grab all of it. And so if they do that over the weekend and ping in a pool of 264 like they did prior on August 1st, then I will let you know, and then we will act accordingly. But as of this moment, they could just be aiming at that external liquidity below, down in the 28.1 and below region. All right, ladies and gents, short but sweet. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.